Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Okay, welcome Leon from Jubilee Metals. Obviously announcement this morning saying that we were going to have a raise. So give us an idea. I mean, I want to say something about raises first, not about your raise, but about raises in general. People, investors, understand that companies list on stock markets to raise capital to improve their businesses. Okay, they wouldn't be on the stock market otherwise. Okay, so the minute the UK investors think raise is bad, it's bad. Think again, okay, because it's not bad. And the US market does not think like that. And the vast majority of other markets all around the world do not think like this. We are sort of trained to say a raise is a really bad thing. Well, it's not. If you're employing that capital in any business that is going to be a better return than the capital that you've produced, you're gonna be beneficial to all of your shareholders. Anyway, that's the end of my rant, Leon. But tell us about Jubilee and what we've done and why we've done it, and then hopefully people can understand.
Thank you, Kevin. Yeah, thank you for the opportunity. And yes, of course, capital raises are never welcomed by our shareholders in general, but I fully agree. It's what you use the capital for that needs to be unpacked. In this particular case, the background to the raise starts with the transaction we announced on Tuesday this week. To put that transaction in perspective, is where we have announced that we've acquired the biggest waste rock surface copper resource that exists in Zambia and in Southern Africa. We've acquired that resource, and that resource, which stretches nearly 8 square kilometers, contains more than 350 million tons. At 1% copper, that means it's 3.5 million tons of copper in that resource. You can therefore imagine the magnitude of an operation that can be sustained by that resource. We can scale to 30, 40, 50, even 60,000 tons of copper per annum for many years into the future on that resource. So with that resource, we coupled a transaction with the International Resources Holdings Company, a subsidiary of the extremely large International Holdings Company corporation out of Dubai. This company has got a very key strategy it's announced through its mining division, the IRH. Copper being one of the central metals it's pursuing. It wants to get it's targeting growths of north of 1 million tons of copper per annum. It wants to achieve that through 2 initiatives. One, the acquisition of copper producing companies, like they announced with the acquisition of Mopani Copper, the jewel in Zambia. And they don't stop there. They are looking at many others to add to that. The second area where they look to make a global impact is copper from surface, the green copper, the copper you get without mining. And out of our negotiations and discussions, they chose to partner with Jubilee based on our experience and our expertise to drive in joint venture that strategy. Under that agreement we announced, it means that they bring the capital at rates that no bank can compete with into that special purpose vehicle, that company we are forming jointly. We as Jubilee are appointed to implement, operate, design that solution under a commercial agreement would add to our position. And we therefore enjoy a fully funded position to implement a global company targeting on this waste rock initiative that we have. That's the potential that offers. Now, obviously, the obvious question that comes from that, well, if that is so brilliant, why are we raising this capital? When in fact, it's a funded position we've negotiated under this SPV. The reality is quite simple. The value of that funded position in the SPV is realized by Jubilee when that project becomes profitable, because its earnings potential is significant. That project alone dwarfs whatever else Jubilee is doing within its copper rollout plan, within its expansion of chrome that it's doing in South Africa. That's the potential of this. So it's in our interest to bring that operational component of that SPV as far forward as we possibly can. We entered into a period in December when most companies fall asleep. This affords us the opportunity to use this time to book and acquire manufacturing capacity now before companies wake up, to ensure that the process modules we plan to deploy under that SPV commences construction immediately. That costs money. on top of our capital investment we're making. That investment, yes, will be refunded to us by the SPV in time. It will be refunded to us by April, May this year. But if we were only to make that commitment to construct these plants, when the industry wakes up, end of January and February, we don't lose 2 months of construction. We could lose 6-8 months of construction time. It means the operationalizing of this SPV can be pushed into 2025 for Jubilee. By securing that kind of capacity now, making the investment now, it means we can bring forward these timelines by 4 months. We can, within this year, in 2024, which lies ahead of us, become operational within that SPV, deliver the earnings into Jubilee, and have that investment refunded to Jubilee to drive other growth areas within Jubilee outside of what we do.
So Leon, when do you envisage, now that you're obviously going to be able to, the raise has been done and you've managed to actually get £13 million, not £10 million, because effectively you were massively oversubscribed. So that's obviously a very big positive. So from that perspective, how soon are these things manufactured and on the ground in Zambia? When are we talking that actual, and are we manufacturing 4 in one go, or is it one and then another one and then another one and then another one? So try and explain that.
Thank you, Kevin. Yes, so just to explain the mechanics of the raise. Yes, you're correct. We were massively oversubscribed. We cut back heavily the offer that we've received and to prioritize our long-term investors beyond anyone else on this raise. And we're very thankful for that support. The mechanics that follow is following the EGM that will be held on the early January, the 3rd of January. That then allows that raise to be complete at that time. In the meantime, on the back of the support we've received, we are immediately entering into discussions as early as next week to secure the capacity at manufacturing locally in South Africa to be able to construct 4 modules simultaneously. Simultaneously in the sense that their delivery is staggered by roughly 6 to 8 weeks apart, because you have to plan the implementation and commissioning of those units. It means that in the perfect world, these units are manufactured within 4 to 5 months. They take roughly 8 weeks to assemble and commission. That's how fast we can bring this units into operation. In this time, we are going to spare no time to complete the profiling of this vast waste rock resource, to prioritize the areas where we'll be deploying these units so that we can operationalize them in the shortest possible period. Remember, we have a tremendous spotlight on what we're doing now as well. This operation offers Zambia an example of how fast significant copper can be produced with an internationally recognized fund like the IHC and Jubilee's operational ability to employ people and bring copper to market. It speaks to what the president of Zambia has said that he is targeting. And remember that the IHC, as the owners now of Mopani, is in any event linked to us through the projects we do with Mopani. So there's a vital link that we've established between the two of us, but that's how fast we can roll out. And the 4 modules is used as an example. The 4 modules can become 8 or 10 modules as we scale this project. This project's magnitude is able to carry far more than just the 4 modules we used as an example in our communications to date.
So because of the 13 million as opposed to 10, does that mean that there's a potential that there could be 5 modules or 6 modules
the potential
started off?
What that potential offers us to take out the full manufacturing capacity at our partnered company, to buy out all their capacity and dedicate that capacity to the establishment of these units. That's what it offers. So yes, not only does it mean we can scale faster, it means that we can take out the capacity for the first 4 and the next 4 modules out of their capacity to ensure that we fully align both our working capital, where we will be employing, training, and preparing for the commissioning of these modules, knowing that there is a pipeline of 12 months of continuous delivery of process modules into this operation.
So you're looking at them maybe by September of next year. Hopefully, you've 2 fully working and producing modules on the system.
Correct. It only takes 4 modules. 4 modules exceeds even the strategy we had spoken before of reaching 25,000 tons of copper, just 4 modules surpasses that. And remember that this is in addition to the current expansion happening within Rowan and Sable. So this
I was going to say Rowan's going to produce 20,000 next year anyway, no?
So where we're going in any event, remember that our current installed capacity reaches a maximum of 14,000 at Sable and Rowan combined. That's our maximum capacity we have. It's therefore in our interest to expand as best we can and as quickly as we can Sable to absorb as much as possible of the copper from this project. Now, clearly, if you look at the size of this project, it will far exceed the capacity of Sable because of the size of operation we can deliver. And therefore, what we have in the partnership with the IRH as the owners of Mopani, there sits nearly 200,000 tons of refining capacity that we can access through a toll refining agreement. So that's the strategic benefit that comes together on this project and at this scale.
So in Sable, the Sable refinery, which, as you said, has 14,000 tons of capacity per annum, are we saying now that the priority is not going to be the cobalt, and basically we could turn that track back into copper, and the copper can then be what? Are we going to be able to get 28,000 tons? Are we going to be at what is the?
Yes, exactly. Well spotted. So we have the capability of potentially increasing that, the 12 to the 14 to probably 16 to, if we really expand to the ultimate footprint and power available in that area, maybe to even 18,000 tons at Sable. But then we reach its full capability. We really are hitting the limitations of that footprint area we've got there. And that's why the partnership with the IRH becomes so important, because we're no longer limited by refining capacity. We have now access through our partnership to a refinery which is many 10 times the size and more of Sable.
Very good. So tell us a little bit about then what else the money will be used for. Obviously, the vast majority of this money is going to be used for what we've already discussed.
Yes.
And, if at the end of 2024, you have 4 of these in place and going, which I think you can just about do.
Yes.
This is going to produce 25,000 or more tons of contained copper.
Yes.
You also have what's going on in the other project in South Africa, but I'm talking about the copper in Zambia now, because you also have the Rowan situation in there as well. How many tons is that modular unit likely to produce?
Conservatively, we're going to exceed 10,000 tons from that alone. So you can see how we're starting to combine already to 30,000 tons of copper coming out of production. And that's just assuming we're stopping at 4 modules.
Yeah. And what other projects are you expecting to work on then during 2024, other than these 2 projects that we just discussed?
I mean, these 2 top projects take absolute priority for the group to focus on because of what they now offer us, and through the partnership. Because just to remember that under our partnership is, as we implement and grow, we have no capital liability to bring this project to fruition. This is the only capital we are allocating to this project. All other capital is provided via the SPV to the project. So Jubilee is entering into a phase where we become extremely capital light. We have very limited capital exposure as we're coming to the end of our capitalization program in Zambia on Rowan and Sable. We're coming to the conclusion of our capitalization program in South Africa on that chrome expansion, where we look to build another 2 units. So all of that massive capitalization we've pumped into our company. We spent nearly 50 million pounds just in the previous financial year of profit to drive growth in this company. So that's...
Yeah, I was going to ask that question. If you looked at the last 3 years, how much money have you literally sank into the ground, if you like? How much money have you put into equipment and all of the other things?
We've laid the foundation through that investment. We've pumped in more than 100 million pounds into the company through capital investment. It's on that foundation that these opportunities now come to us. And we've done that by redeploying free cash flow from our operations into growth. And that's what we've been doing over the past 2.5 years for the business. And that's coming to its end now. It's coming to a fruition where Jubilee's free cash is no longer going forward committed to the capitalization of the business. The free cash now can be considered either in time, whether are we redistributing that to shareholders, are we doing share buyback, what are we doing with that spare cash flow that Jubilee will be generating into the future. It's a new phase of the business that always was going to be reached. This agreement has just brought that phase forward.
Yeah, I mean, based on those numbers that you're talking about and the increase of copper, I don't think it's beyond the bounds that by the end of 2024 and moving into 25, that you could be throwing off £8 to £10 million a month in cash flow.
I mean, we're definitely reaching a value that is very likely to be 4 or 5-fold of what we do today, comfortably, based on the growth profile that this operation offers us, Kevin. And it's coming at a time when copper is starting to feel the pressure of the supply constraint. So if ever you want to be ready for the copper potential upswing that's coming into the market, it's in the next 6 to 8 months to be ready to take and play during that price environment.
Yeah, and I had sent you an article, but you obviously already knew the details of that article, that was written basically that because the First Quantum's mine in Panama is basically being taken offline, license has been revoked, effectively 400,000 tons of copper have come off the market. We've got Anglo American who are now giving guidance that they're going to have 200,000 tons less of copper in 2024. Now, that was effectively, those two together were the surplus in copper. And this probably is going to put the world into a balance, if you like, in terms of copper. How do you see that playing out at 24, 25,
exactly,
26?
Kevin. It brings copper into that perfect storm. You have a supply constraint in copper, and you have the world that is starting to find its feet again. You saw the news flow out of the United States on the economy, on the potential of cutting rates. The world is starting to find its feet. The projection that copper is in parity on the back of that copper being taken out of the market is on the assumption that the world does not grow. And the demand of copper is stable, which is highly unlikely to be the reality that we're facing into the future. So copper is poised to reflect in its pricing a metal that is in fact below undersupplied for the demand. And that's the push that was always expected and projected for copper prices earlier already in this year, expected to reflect that, but dampened by the reality of the world economy. That's the expectation that copper has in its copper pricing, for copper prices to finally challenge that $9,500 and above dollars a ton of copper. You want to have secured your resources by then and be operational to participate in that upswing in the market.
Yeah, absolutely. The man of the moment in terms of copper seems to be this Robert Friedland, billionaire mining investor Robert Friedland. And his quote was, "We're heading for a train wreck here," as in there's accelerating demand and the supply is being, the supply is not increasing, is it? Let's be honest. They've just taken that off. Supply is not increasing. And the other aspect of what really motivates me about Jubilee Metals is that you are cleaning up big messes as well.
Absolutely, Kevin. You know, we had so many demands during this week of this very, very small targeted capital raise from green funds wanting to enter the placing, which we haven't allowed any non-existing shareholder, because it's so recognized that this copper that we are speaking of now at a scale, as they call it, green copper, is a green copper initiative.
It's quite ironic they call it green copper. It is green anyway.
It is quite ironic, actually. It's at least the one place where it suits. So many people adopt the word green in their communications, but in this fact, it suits actually quite perfectly.
Yeah, indeed. Well, I mean, I wish you luck, actually, from the point of view of getting this manufacturing stuff in place, expanding the chrome without causing you any problems in terms of having to wait longer to do all of those things is obviously a positive as well. And yeah, I think this is the deal that you've had and now this raise to allow you to basically quicken how quickly the revenue starts to fall is going to be a transformational year. And then 2025, you're going to be a monster in terms of the amount of free cash flow that you can produce, I think.
Yeah, thank you, Kevin. I mean, this is the culmination of years of work. Not all is perfectly planned. Yes, we bumped our head here and there, but this is the culmination of work and opportunity that's come together. And as you correctly state, this offers a transformational period for Jubilee. The right partners, the right strategy, the right structure of an SPV, and the right resources to deploy what we've learned on how to extract copper from these waste surface resources. We could not have asked for the better combination of an opportunity at this time that we've been able to secure.
Yeah, and I don't think it's a big ask to say that you're heading towards 100,000 tons of copper, and over the next 2 years, even at the 30% margin, and if copper prices increase, you're probably talking $200, $300, $400 million for sure, and in terms of your profitability, which will be amazing.
That would be, Kevin. For the first time, I can sit and actually see that vision, see the potential of that vision because of who we've partnered with and how we've partnered with them.
Yeah, and based on that, as I said, I think you're going to be a reclamation major, if you like, and ultimately 4 or 5 times of revenue is what these companies are valued at. So any of those figures, you're talking $1 billion to $2 billion in valuation. So I think that's where you're headed, and I wish you luck in doing it, because it's not going to happen overnight, obviously. But I think people need to realize the magnitude of this, and that your partner is also not going to stop here, and they're going to bring you along, I would imagine.
Correct, Kevin. Thank you so much.
Okay, thanks for your time, Leon, and we look forward to speaking to you in the not too distant.
Brilliant. Thanks, Kevin.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.